Hello, hi, welcome to this video. This is Arvind here. Let's look at the market view and trade setup for the uh, monthly expiry week, that is November month expiry. So before we go into Nifty, let's look at the US market, how they closed on Friday. If you look at Dow Jones, you can see it had a down day. It closed negative 0.75%. It's closer to the lower end of Bollinger Band and it's around say 350 points from the 50 DMA. So even if it falls, the fall may be limited to another say 250 to 350 points on the downside. It may take support here. So that's on Dow Jones, but S&P 500 was fall on Dow Jones could be because there was some news on Europe lockdown and things like that. That may be the reason. But S&P was stable, and in fact Nasdaq was it closed positive. So maybe IT stocks may remain stable or even go higher tomorrow. We have to wait and see. So US markets are mixed, no clear direction there. It's kind of volatile. SGX Nifty says that it's around 17,670, 680 zones, right? It's closed lower, marginally lower. On Friday, it's the overall downtrend is about 50 to 70 points on SGX Nifty. So coming to Nifty chart, it's forming a lower high and lower low. That is indicating a downtrend. You can see there was a second instance here and the third instance. It was forming higher highs and lows. There was a channel here which got breached, which we spoke last week also. This channel got breached on the downside. So this is clearly indicating weakness in the market. 50 DMA has also been breached on a closing basis. In fact, this has happened after almost 6 months. If you go back to the month of May, somewhere here, when we were going through the second wave of COVID-19, that's when we breached the 50 DMA somewhere here on a closing basis, right? From there, we recovered and we have stayed above. This is the first time we have closed below 50 DMA, which is a sign of weakness in near term. So unless we bounce back and close above, we could be on the near term weakness may continue. So what are the levels we're looking for, right? It's already tested the lower end of Bollinger Band and it's bounced back, which is 17,700, right? The way SGX Nifty is indicating, if at all we open, say, with a mild gap down here, so we may test 17,600. And if you open gap down, there could be a short covering rally towards this trend line, which is around, say, 17,800 to 850 zones. That's entirely possible, right? If you see any kind of bounce, you can look to close your long positions, and you can also attempt some short position with the stop loss at the 20 DMA, maybe a little bit above 18,050 could be a stop loss for shorting. So you can attempt shorts on any bounce towards 17,850 to 900. That could be a shorting opportunity because the market is definitely on a sell on rise kind of week. So what are the levels or targets if you want for intraday basis or maybe BTST trades? You can take some put options here on bounce, and your first target is 17,600. And if that gets taken out, I think 17,450, 400 to 450 could be expected on the downside, right? So 17,500, I think being a round number, a lot of put writing is there. So I think that should ideally act as a major support in the near term. So somewhere here, in fact, this doji candle which you see here, I think that could act as the support zone for Nifty, because that's exactly where we bounced back last time, somewhere here. So this is a good support zone. That was on the 1st of October. From there, we had a good rally to all-time highs, 18,600. So I think this is a very good demand zone in near term. So I will be personally attempting some long positions here for a good bounce back, at least the 50 DMA. Say on the 300, 400 points bounce we can expect. This is a good risk to reward when you favor, say, 17,400 could be a stop for any kind of long positions, if at all we get a dip here, right? So this trend line will act as a resistance zone, and 20 DMA is here. So any kind of close above 20 DMA only will give confidence to bulls for further upside. But again, upside is limited to 18,200 to 250 because a lot of call writing is here, at least in the monthly expiry. So I don't see any kind of upside trend in the next 1 week. Maybe we can expect after the monthly series, we can expect some good trending moves. I think the next 4 or 5 days to at least till expiry, I think market can be sideways with the negative bias. So any kind of pullback rallies will be used to sell into. That is my view. So it's going to be tricky monthly expiry. If you're a safe trader, avoid index and stick to stock specific trades. That is my opinion. So that's on the Nifty. Coming to Bank Nifty, it's close below 38,000, which was a very good support zone, but still around that area. In fact, Bank Nifty was showing some kind of strength compared to Nifty, which was weaker, right? So on the downside, support is at 37,350 and 36,900. So good support zones as per price action. So any kind of rallies to 50 DMA can be shorting opportunity, which is around 450 to 500 zones, somewhere here. That will be a shorting opportunity. If it tries to hold above 50 DMA, I think that will be a good place to go long for 20 DMA target. So on 39,430. That is the trade setup on Bank Nifty. So ideally sell on rally towards 50 DMA, or at least till Thursday's high around 30,050 DMA. Right, that is the trade setup on Bank Nifty. Now coming to another important factor is the dollar index. You can see it is from 94 it's gone to 96 and still gaining strength. If you look at the weekly chart, it is walking the Bollinger Band and it looks set to test 97, 98 zones, right? Or it may even test 100 in the coming few months if this continues, right? So in the monthly chart also you can see here it's above 50 and 20-month average. So it may ideally go up to 98 zones, which is the next resistance zone in monthly chart. So this could be a dampener for any kind of up move, because this will work against equity markets, emerging markets basically. And good sign, which means when the fall may be limited, it's already close to Bollinger Band on the lower side. So we have to see how this, if this starts to increase again, then it will be a problem. So as long as it stays below 15, I think we are good. So coming to the options chain, so let's look at the PCR. PCR for Nifty is 0.65 and Bank Nifty is 0.4. Both are extremely oversold, bearish trend. So any kind of on a positional basis, I'm saying I think this will be a good place to start building some long positions. I mean, for equity investments or even long-term call options if you're planning to trade. I think these are good oversold regions to go long, like contra bets. Any dips to 17,500, as I said, I think it's a good buying opportunity. But let's wait for the monthly expiry to play out, then we'll get a better trend. So where is the max pain for Nifty here? This is where the maximum pain is. So as I said, any kind of pullback rally to 17,850, 900, you can try to short the index with a stop about 20 DMA. That is the view on Nifty. And coming to index heavyweights, so Reliance is also taken a very good support at 2450, and in fact I given a buy call on this also. So it's a very strict stop loss at 24.4. I'm sorry, 24.40, 45 could be a stop. It's at oversold region as per Bollinger Band and a very good support. But we have to wait and see how the news-based impact is there tomorrow. Any kind of gap down here, if it sustains, then it may start to collapse further. It's above, I think it can rally back to 50 DMA and 20 DMA, which is somewhere here, 25-50 zones. So that is my view. If it opens and stays above here, try to attempt a long, but stick stop loss at 24.40 zones. HDFC Bank has taken support at 200 DMA, which is an excellent buying opportunity. I also gave a buy call on this to my clients. So in fact, even though Bank Nifty was weak, the overall market was weak, but HDFC Bank managed to stay positive with 0.56% on Thursday, which is a sign of strength. But again, we have to wait and see. If you're going long, your stop is just below the 200 DMA, around say 15, 10 could be a stop loss. So good favorable risk to reward ratio. If at all this sustains, I think it can go up to 20 DMA, which is 15, almost 1600 zones. So that is my view on DEX and a couple of stocks. So just be cautious. Let's just be very cautious this week, because we can expect some kind of weakness, some more fall expected. But if you're going long, this is a good time to go long around here. But positionally, if this is going to break, then we're going to invite more trouble. 17,235 and 16,745. This is the next support zone. Obviously, 17,000 will also be a support, being a round number. So if you're looking to trade on the index, these are support levels which you can keep a track on. All right, so that's about it. If you like to take my live market support or PMS, you can just check the link in description, or you can also WhatsApp or email me. Have a good trading week ahead. Take care and bye-bye.